No, Spanish compliant. What did you want to talk about? Spanish compliant
Investments.
just investments in general. Yeah.
Yeah, just one thing. I think when people come to invest with me, we talk about what investments they can have. And one of the things that's on offer is what's called a Spanish compliant investments. And people want to know about the benefits and then forget about them. And then they always ask me again and again. So I'm just going to go through it. When you normally invest, say you invest on a platform or anything else, if it's not approved by the Spanish authorities, in theory, every year you should declare your gains, and if you buy and sell positions, you need to tell them. And it can take up quite a lot of time. It's quite complicated. It can cause some problems with the tax man. And also, if they're held outside Spain, which nearly all of them are, you have to report it on the Modelo 720. Most people who are retired don't want the hassle. They don't want to think they've got any problems with the hacienda. So that's why we offer Spanish compliant investments. And what they do is they give a raft of benefits. So what it means is it's compliant under Spanish tax regimes. And as the client, you're on the radar regarding the Modelo 720, so you don't need to do one. And if you take money out, they deduct savings tax, because if you take doing a Spanish compliant investment, you can never be taxed on return of capital, only the gain. So when you take out 10,000, say it's grown by 10%, or let's say 100,000, say it's grown by 10%, so you've got 10,000 gain, so they will only tax you on the gain, not the whole amount you take out. Whereas if it's income from a pension, you get taxed on the whole amount. And savings tax rates are a lot less. They start at 19% and go up to 27%, whereas we know income tax starts at 20% and goes up to 48%. So it's a lot more effective from that point of view. What happens is you don't have to declare your gains each year, so you get gross roll-up. So say it goes to 110 at the end of the year, you don't have to pay tax on the 10, it just carries on growing. So you get what's deferred tax and you get compounded growth, which is very, very good. Also, the assets are held within a life company and they're ring-fenced for the benefit of the client alone. So what it means is, say your company is ABC, the one who's given you the investment. If they go under, the creditors can't get that money because it's ring-fenced in your name. So a Lehman Brothers, say that happened, but they were an insurance company. If people had had their products in insurance, they wouldn't have been able to take their money. They would have got it back. So there's various things here that are really, really important. Also, it can be done in joint names whether you're married or not, and that can help substantially with inheritance tax, especially here in Spain, because if you're not married, they penalise you with regard to inheritance tax if you leave it to each other. There are ways around it, but this is a very good way. And also, spouse to spouse is free. In the Valencia region at the moment, there is no inheritance tax spouse to spouse. However, if a new government comes in the Valencia region, they could reinstate it. So these policies are very good for that. Also, they're held outside of Spain, even though they're Spanish compliant. They're usually held in Luxembourg or Dublin, which means they are not subject to Spanish inheritance tax unless the beneficiaries reside in Spain, and then obviously it's the tax in their region. So if then they're in the UK, they are not subject to Spanish inheritance tax, which is really, really good. Also, if you've been outside the UK for more than 10 in the last 20 years, it doesn't form part of your UK estate either, because they are not UK-sited assets. So it's a win-win for some people. It eliminates inheritance tax on these altogether. So there are various regions to do it, and the main one is when you take income, you don't need to declare it. It's a return of savings. The companies send you a tax certificate each year telling you what you've taken out, what tax you've paid, and it's only if it goes over a certain threshold that you may have to pay an extra 1 or 2% in tax, but it's very, very rare. So all you do is you keep that with your tax things. You can tell your history or accountant about it, but tell them it's already had its tax paid, and you can show them tax certificate, and it just makes things a lot easier for people, and that's why we sell them. They used to be more expensive than other investments. Obviously they are slightly more expensive than you go straight onto a platform, but you've got all the benefits, so it does justify the extra cost. And I had someone in the other day and we went through all the benefits of doing a non-compliant versus a compliant, the costs, etc., and he understood the costs were less with a non-compliant, but didn't want any hassle if anything happened for him, for his wife, for his children, so he went the compliant route, and it is very, very popular. And so anyone out there who's just moved to Spain or lives in Spain and wants to do an investment and you don't want any hassle, this is the way to go. They're called a whole of life policy. And what that means, it carries on until either you die or you choose to close it down. And they're very, very easy to set up. Most of them have online access so you can see how your portfolio is doing, and you just go through your advisor if you need anything changed. And obviously you'll have your annual reviews where you talk to your advisor anyway about them. And I just wanted to talk to it because some people get very, very confused. They think Spanish compliant means that it's held in Spain. No, it doesn't. It just means that it's been approved by the tax authorities and it's compliant with all their rules and regulations. And that's why I think it's really important that people understand that.
Gotcha. Okay. And you mentioned the inheritance tax. And if you are in the Valencia region, the default, I suppose, would be spouse to spouse and then to children.
And you get 99% relief now. And when you take into consideration the costs when you die, if you offset those, there's such a minuscule amount to pay.
No, it is something to bear in mind, though. Once you get outside of partner or children, then you do start to get taxed on inheritance. Would it be something you'd put in your will, this investment?
Yes, or you can nominate beneficiaries under the policy, which some people do, and then you don't need to worry about your will. Yeah, if you're not married, in some cases, inheritance tax can reach 70-80% of what you inherit, depending on your pre-existing wealth, so how wealthy you are as an individual. So it is rather worrying, and this way you can avoid that nightmare, especially if you want to leave it to your partner. There are other ways to do it as well. But this is something that at the moment isn't changing. It's been this way. I've been doing this now, over 15 years, and it's always been that way. So it's something to consider, and it does alleviate that. With nieces and nephews, obviously the Valencia government is reducing the tax to them. But if you're not related, that's when the problems come in Spain regarding inheritance tax.
Yes, it goes for various categories and extends
out.
There
is. Yes.
From children, then you start to incur more
kinship
tax.
Categories, they're called. And in Spain, you've got to remember it's not inheritance tax, it's succession tax. In UK, your estate pays the bill. In Spain, it's the beneficiary that has to pay. So before they can inherit, they have to pay what tax is due. And for some people, that used to be a major problem. Again, you have to make sure that they've got enough money to be able to pay to be able to inherit.
I'm thinking that 71% all get married.